Good evening, everybody, and welcome. This is the Thursday evening Viper Trading webinar. You're here to learn about trading the futures markets in choppy markets. Actually, is the title tonight, trading with choppy markets. You're in the right place. First, let's knock our standard disclaimer out of the way. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here tonight does know that you do trade at your own sole discretion. Okay, good. All right, well, we took a poll of the team here tonight before we get started on what instruments we would like to show. And as I mentioned a minute ago, tonight's topic is dealing with choppy markets. So let's talk about what a choppy market is, so we're all kind of on the same page. Yeah, NASI can be choppy too, Peter. Definitely. I'm gonna go ahead and take off the predictor ovals for right now, just to sort of look at things from a very high level. When you think about choppy markets, what does that mean to everybody here tonight? What is it when somebody says, well, boy, it's really chopping around? What does that mean? Really chopping around? I mean, you hear it sort of bantied about all the time. Chop, it's really in the chop. What is that? Is that like chop suey? Is that like a chopped steak? What is that referring to when you hear that term? Just to make sure we're all on the same page here when we talk about the term chop. Okay, good. All right, we're getting some good feedback from the team here tonight. Peter says no defined support and resistance, no definitive trend. Good. Sometimes usually not tradable from Carl G. Very few swings, trading during a trading range, back and forth, up and down, no trend. Good. All right. Okay, so everybody sees the NASI chart here. So I know we have discussed this many times in other webinars, and I know since we are primarily retracement traders, we like trends, right? That goes without saying, the fact that we like trends. So you can see, let me just point out a couple of trends. You can see obviously there was a downtrend right here. Had a nice trade in it. This is today, by the way. I'm having some data issues, so excuse me, pardon me. This is going back a couple of days, but it really doesn't matter because it's the price action that we're trying to look at here. And so what let me jump to the sort of straightforward into what's really important is, how do you know you're in chop, and how can you define the chop very quickly? So coming out of this trend here, for instance, you can see, let's talk about how we can do that together, so that when we see it as early as tonight or tomorrow morning, whenever you're trading, that you can quickly identify it. Because it's important that you see that on your own chart. I mean, we're going to help you. If you're in the live trading room, obviously Gary's very good at putting lines on charts, and we can identify the chop together very quickly. But let's suppose you're not in the room, or let's suppose you're just kind of listening to the room and you want to do it on your own on your chart. Here's how you can do it. It's really very simple. And let's do it like this. Let's kind of do it step by step. All right, so here was the downtrend. We came out of the downtrend and we put in a swing level down here around this 30-31 area. So we're going to go ahead and we're going to start off and we're going to put a line down here. Okay, when you get down, let's blow this up so we're really clear. Everybody's really super clear about what we're talking about here. Now notice what happened here is that you had a yellow bar probe right at the mid band that did roll and break, and you got a little scalper of a trade trying to get back down to break that 31 swing, but it failed. It didn't quite get down there, came back up, checked it again, and if you were in that trade, depending on the tightness of your stop, you got taken out. And then it came up and it tried to hit this 4,400 and it rolled here. So you could have still been shorting up in here. Background was red. Trend technically was still down as long as you were underneath these, let's say this 42 area here. So you could still be shorting in here. Now here's another thing you want to do. When you see another swing like this up here, this is really important. It's really simple, but it's really important. And this is the simplest way to identify if you are going into a range-bound or choppy condition in any market. When it comes to that top swing, you go ahead and you take another line, horizontal line, and you put it right there. Okay? Now, I think before I advance this chart, would we all agree that as long as this market remains in between more or less these two lines, that we would be in a range? Yes? Now, would we all agree that? So in fact, as early as whenever you start trading, you know, if you're a night owl and you trade at night and you're watching markets, maybe you're trading the currencies in the Asian session, or you're up overnight trading something, you know, 6E in the dollar index or whatever. It helps to just put a couple of lines on there, because what it does, it provides a framework, it provides a structure, it visually gives you an understanding of whether the market is going to remain within this range or break out and either continue a trend down or continue a trend up. So let's go ahead and advance the chart together. Ready? Okay, here we go. All right, now look at what happens right here. Is this a trend change? Yes or no? Right here. Have we broken out of our range and now in an uptrend on this little spike right here? How many of you are buying 43.50? You're going to get long here. It's time to get long, right? We've broken out of the range, and let's go ahead and buy. Let's go ahead and buy right now. What do you think? I mean, look at it. Background's turning. Bars are blue. Look, mid-band's stair-stepping up. Background's green. What do you think? Is this long time? Here, let me advance a little bit more, and then you can, as you're sort of pondering the answer to that question, okay? All right, here we come back. Here we come back. Trying to advance the chart. How about now? Was that a trend change? How about right now? Is that an uptrend now? Okay, let me do a little more. How about now? Let me do a little more. How about now? Okay, so here's the important takeaway. Here is the important takeaway, and I know that all of you tonight, and if you say you don't, I know you're telling a fib, so to speak. We all wrestle with this issue. And the issue is the issue of the old, what we call head fake. And head fakes can happen to the downside, and head fakes can happen to the upside, where what happens is you get a poke up like this. Your natural inclination when it's happening, and that's why I paused it right here to ask the question and said, is this a trend change? Should you be buying? And a few of you said yes. Many of you said no, or not yet, or wait for a pullback. So what we have to do, and I know what this is you feel compelled to want to get in on the very first step of a move that could just take off like a rocket, right? I mean, isn't that, yeah, there you go. That's a good way to put it, MG. Fear of missing the trade compels you to want to jump in when you see a spike like this. Is that fair to say? Fear of missing the next big move, which could be up. And occasionally, you know what? You're going to miss it, right? I mean, sometimes markets break out of ranges and they just run like a big dog and they never look back. But how many times have you seen that? Say if you count 10 times, 15, 20 times, say 10 times. How many times out of 10 does it actually pull out and run and never look back? How many times out of 10? Just a guess. Just a guess. Just a wild guess. How many times out of 10 does it actually break out, pull out of a range and just take off and never retrace at all? Never. Just keeps going. One, maybe two. Very few, right. Very rare, 10% or less. I would totally agree with you. So if you know intuitively that the fact of the matter is with a breakout, you have a 80 to 90% chance of not missing the trade. That very rarely is it going to skyrocket back up and never pull back at all to give you a chance to get in. That's extremely rare. That you don't have to go for these head fakes. That's the point I'm trying to make. Don't let these head fakes suck you in, because I'm telling you, they're just money sinks. And then what happens is this, and I know, I've been there, trust me, more than I'd like to admit. You get sucked into a trade, maybe you buy here, maybe you buy there, you're in long. Okay, now you're committed long. You believe this thing is heading up. All right, so you're holding on to it. You had a stop, maybe your stop was here, you drag your stop out of the way, you say, I know it's going to bounce, it's going to come, it's going to hit that mid-band, it's going to come off right off that 37, it's kind of sitting here and you're dragging your stop out of the way and you're just kind of, now you're in what's called a hope trade. Now you're in a hope trade. Say you got long from here. I don't know, let's just pick an area. I don't know. Somewhere in here you got long. You thought this was a break, it pulled out, pulled back a little bit. You're thinking maybe ABC, you buy, you get in on this bar, you're long, it starts pulling against you. You know, you take your stops against your better judgment, you pull the stops down a little bit. Maybe your stop was here. You know, you say something like, well, you know what, maybe if I give it a little more wiggle room. And what's happening is you're avoiding taking that hit because you don't want to get stopped out. Right? Anybody do that? Comes down, you might have been stopped out somewhere in here or over here or whatever, and you just drag it out of the way. Now you're in what's called a hope trade. You're hoping. Here it bounces a little bit off the mid-band. Now you get a little vindication, a little validation. Oh, yeah, look, it's going to come back. I'm going to be good. I'm upside down, but I'm going to be all right. Look, it's hitting that break. It's trying to break the swing. It's wicking it. It's wicking it. And then, boom, you get power slammed, and you take a hit way down here because you dragged your stop out of the way. And you just get power slammed on a hope trade. That happen to anybody? Diane says, that is my biggest challenge, is to stop moving my stops. Michael says, no, that never happens to me. Yeah, laughing out loud. All right, let me just, I don't want to get sidetracked into this issue, but it's really, really super important, okay? Look, here's the thing. We all get into some bum trades don't work out. No question about it. It's part of the business, okay? But you got to take your licks and move on. Okay, if you find yourself one of these people that occasionally gets or often gets stuck in these hope trades, you know, and you're dragging your stop out of the way and you're avoiding taking that hit, next thing you know, you could have been popped here on a contract or two for maybe $50 with a nice tight stop when you realized it was going back in the soup, and this trade was never going to work out and it was a mistake. You take your hit, you take your lump, and you know, regroup, pull your pants up, and go and move on. Okay, that's really critically important that you do that. You really got to keep those when you're doing, especially when you're trying to get into a breakout condition like this. You know, if you were going to take a long, you know, I could see where you might justify buying, thinking that it was a potential long trade. Perhaps you bought the mid-band, and then when it got up here, you're thinking, you know, it's going to take off, but then it came back and sort of scratched you out. I can understand that logic, even though technically you're still in the middle of this range, because with the exception of this little blip up, we all agreed when I drew these lines, we all agreed, everybody said yes in here, that as long as it stays between these two lines, we are range bound in the chop. Yes? So by all rights, you shouldn't be buying mid-band. And if you bought in here and you got sucked into a trade, wherever you got in, you take your lump and you get out. Right? Take your lump and get out. That's an important takeaway for those of you who get into those hope trades. Just take your lump and get out of it. Because the double whammy is this. The fact of the matter is, notwithstanding the fact that you were sucked into this long trade, you could have been trading this range. And that's where the double whammy comes in, is actually technically you probably should have been shorting that and then covering when it got down here. Yes? Right here. Right? So you're in the range, and then you're buying down here. So the conditions are different, right? You're not breakout trading here. You're not trading the mid-band. And that's the one thing I want to make really clear is, you know, when you're in ranges and the mid-band is right in the middle of the range, this is where we, generally speaking, not all the time, generally speaking, you are not taking mid-band trades here. And I know the mid-band trade consolidation region is a go-to trade for a lot of folks in here tonight. It's a go-to trade for me. I have a tendency to look for those, but where I avoid them is when you're in a range and the mid-band's right smack dab in the middle. That's not the trade to take in here when you're in a range like that. If your gut instinct doesn't give you success, one needs to take a look at that. Okay, Ron, let me look at some questions here. Okay, good question from Diane coming in that I think is pertinent to the group here tonight. How did you stop yourself way back when from not moving your stops? I forced myself to stop doing it. I allowed myself to take the hits. See, that's the fear that everybody's trying to avoid. Everybody is trying to avoid taking that hit. That's why you move it. That's why you move it. You move it to avoid taking the hit. You have to take the hit. You have to take it. The key, well, in all due respect, let me back up for a minute. The real fix, the obvious fix is what I just said, is that you take the hit and you learn to take the hit because you don't move it, you accept the hit and you move on. That's the obvious. The real fix is being more careful to look for those perfect entries so that you don't get in situations like that. That's the true fix. Right? David D, are you dealing with that too? What I'm describing, Chillipathy, you came in late. Okay? What we were discussing, if you missed it, just to recap very quickly. Let me go back here. Let's get this chart to for those that actually there was quite a few folks that came in late. Let me just quickly recap very quickly where we're at here. Okay, we're looking at NASDAQ. It was coming off a long protracted sell-off. This is early in the morning the other day. I don't recall exactly what day it was, but it was selling off very precipitously. The fact of the matter is, you know, we opened the room. Gary gets in there before 6 o'clock. You got the pit oil open. You got the crude. You know, whatever day this was, I'm sure we were short and capitalized on much of this short trade here. Just the shorts. It's just monster sell-offs, right? So, I mean, the first point I'd like to make is by the time you got over here to 7:30, 8 o'clock, and it started to do this chop, you probably should have been done trading, right? I mean, you probably should have. I would venture, like I said, I don't know exactly what day this is, but I would say that I was probably done by the time it got over to here. So you wouldn't even have to deal with this mess. But let's say that you weren't. Let's say that you weren't. So we're coming along, and we all agreed the first thing we're going to do is whenever we bottom out like this, we come and we put a horizontal line right there. That's our first sort of demarcation point to help us determine whether the trend is continuing down. Yes, that's why we put the line there. When in effect we're saying here is it has to break this line for the trend to continue. Yes, that's essentially what we're saying when you put that line there. If this trend's going to continue, it's got to break and continue on down. Yes, stair-stepping down. All right, so we're watching it, and we come up and we take a swing just under the outermost band around 40. So we take our horizontal line and we put it right here. This is our sort of demarcation of where we are now seeing a range form. And as long as it stays within that range, we're pretty much range bound or chop. A lot of people like to call it chop, right? So you have to determine, you know, if I'm going to trade that chop. Well, you know, support is actually now coming up here sort of in this 34 area, to be honest with you. That was the swing, but you know, the actual support level is starting to come up around 34, 34.50 technically. Top is up here at 40. 5.5 times 4 is 20, 22 ticks. You're kind of at the very edge of tradability. 20, 25, 30 ticks is our minimum. So you're right at the edge of the lowest value of that. What we are saying though, and this is, I want this to be really super ingrained in everybody's head tonight, and repeat this with me if you can, even if it's under your breath. We are not breakout traders. Okay, I would like everybody in here tonight and who's going to listen to this recording to repeat after me. We are not breakout traders. We don't take breakouts. It's that simple. So what that explicitly means, so I'm very clear about this, is that if the market breaks this to the upside, I don't care how far it goes, and if it breaks this to the downside, do we take that trade, yes or no? If the top of this range breaks like this, and the top bottom of the range breaks like that, do we take these trades, yes or no? And we affirmed amongst ourselves, just not even a minute and a half ago, what do we all say collectively here tonight as a team? We are not breakout traders. No. You do not. I don't care if this thing runs all the way back up to here. I don't care. I don't care how far it goes. It doesn't matter to me. It doesn't matter to any of us. Because the only way we're going to get in it if it does that is if it eventually does what? Pulls back and retraces to some support level, consolidates. But theoretically, if this kind of thing happened, all the bands would move up and we'd get an opportunity to see a support swing in here, yes? And we'd be looking to get in on a retrace. Now, I have to admit, many, many, many years ago, I'm saying in the very early stages of formation of Viper back 7-8 years ago or so, yeah, sure, we took some breakout trades. In fact, if you look at the old naming convention of our indicators, they were all called breakout this and breakout that. Yeah, sure. So we've evolved from that. We learned our lesson from many, 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 many head fakes where we got sucked into conditions just like this. Hold on one second, please. I mean, let me just ask the question right now. How many of you, and be honest, get sucked into these I'm going to call them breakout fake-out trades? How many of you still today get sucked into these? How many of you, and it's okay. It's okay. I used to get them all the time for years and years and years. I get sucked into these breakouts. You know, things breaking out. Here, let's go through it again real quick. It's breaking out. I'm going to miss it. Here's the next big move. I better get in. MG Max says, I stopped doing it since I joined Viper. Look, all we're trying to do in these webinars is share some experience with you, everybody here, and you know, and provide you with things that try to help not only learn where the proper place to get in is, but perhaps more importantly, equally important, I should say, is where not to get in. And if you can find a way in your trading, when you see breakouts like this, no matter where or when they come, that you sit on your hands and you force yourself not to take it until it does some kind of pullback and you can determine whether in fact the trend has changed from range bound to now up. Let's all take a pact, pinky swear. We're going to pinky swear together. We're not going to take breakouts anymore. I want everybody to type that in on your thing here. Come on, right here, right on your thing. I am not going to take breakouts anymore. Here. All right, good. Not going to take them. Not going to do it. I'm going to break that habit today. And you know what, Diane? Doing that is going to help you and everybody here who gets sucked into those hope trades we talked about, the hope trade particularly where you're forced to start moving your stop around and not take that hit, and then you get power slammed with a 20-tick loss. By avoiding the breakouts, what we're doing in effect is we're stopping ourselves from getting sucked into a trade we shouldn't have taken in the first place. So now we don't have to worry about moving our stops because we're not in the trade. Yes? There you go. I'm not going to take breakouts anymore. Good. What was that movie? I'm tired and fed up. I'm not going to take it anymore. Guy screaming out the window. Everybody, I can't remember what that movie was. Sick and tired. I'm not taking it anymore. That's what we're going to do with these breakouts. Okay, second thing we're all going to do together, right? When we know we're in a range, and this is really important, okay, we've identified, we put our lines. I mean, here it is, 746. We're all the way over here to 815. For an hour and a half, this market was going sideways like this. We know that when we're in a range and the mid-band is right about in the middle of it, we do not take range and mid-band trades. You have to trade the outermost parts of the range if you're going to trade it. You're either shorting the top, covering at the bottom, or shorting at the top, covering part of it on a scalper and moving your stop down on the short. You're buying support, scalping the mid-band, taking profits at the top. Buying the bottom, scalping the mid-band, profits at the top. Shorting the top, profits at the mid-band, covering at the bottom. Everybody following that? We're not getting in here. This is not mid-box trading, mid-band region box. That's reserved for more trending type moves. When you're in a trend and you come back to the mid-band or anywhere around it like we discussed, and you get a little region box and it breaks out in the direction of the trend, then that's when you should be taking those types of trades. Network. There you go. Everybody, that was an old movie. That was an old movie, Network. That's got to be like the 70s or 80s. I'm mad. That's what he said. Diane, right. I'm mad as hell. He stuck his head out the window. It's kind of a crazy old guy. I'm mad as hell. I'm not taking this anymore. William Holden, Network. Yeah, good call, Diane. That's right. Kind of dating ourselves there, huh? All right, is everybody clear? This is really important stuff. You know, because these ranges come along all the time. This consolidation in chop, it's mind-numbing sometimes. I know it really is. Drives me crazy too. Drives all traders crazy. But the fact of the matter is you got to learn how to deal with it. You know, either you decide to trade the range or you just decide to stand down, look at another instrument that might be trading. Maybe you go look at crude or gold or something else. Or maybe you're just done trading for the day. Questions on this? I'm going to move on. Michael. Well, here's the thing. He's at Michael's question, and let me paraphrase it. Yeah, Ron. The breakouts tend to be head fakes more times than not. And as I drew over here with this sort of extended arrow to the left here, you know, if you're going to get a bona fide trend change, you know, it's going to, you know, you're going to get some kind of a more solid up move to some level, wherever it might be, and then you know, 8 or 9 times out of 10, you are going to get some kind of retracement into support. But it becomes a clear and definitive breakout, unless it's early, unless, you know, and there's news, you know, some news event comes out, a high energy time, you know, around the opens, you get a lot of whipping around. Okay, so there are exceptions to this, but normally through the course of the trading session, you know, I think Michael had a question here related to, if I can sort of paraphrase it, he's looking at these swings and saying, okay, well, you got a slightly higher swing here, you got a higher swing there, you got a slightly higher swing here, and so couldn't you make the case that you're now starting to trend up? I don't, you know, I suppose you could kind of look at it that way, and if you felt that way about this range, then Michael, the way you would approach it would be then that you're buying support here. In other words, if you thought it was going to turn out to be an uptrend and you felt you were looking at higher highs and higher lows, that means that when it came into support, now you're buying. You're not shorting the top of the range. You would be buying the bottom of it as your primary course of entry. Okay? Does that make sense? Yeah. So it's all how you view the range. I mean, in the beginning of the fact when the range was setting up, if you felt that the possibility of you know, downtrend continuation was possibly afoot, well then yeah, maybe you're shorting the tops here. Every time it came up here, you're shorting it. So, you know, you have to decide whether you're going to trade the range and which direction you're going to trade it. Well, let's advance this a little bit more and see how eventually this this little range here resolved itself. Okay, hold on. Let me organize this chart. It's getting all kind of cattywampus on me a little bit here. This thing is getting, there we go. Okay, stand by. Okay, here we go. All right, so here was our sell-off. Here's our range. Here's our head fake we discussed. Let's advance the chart and see how eventually this plays out. We discussed not trading the mid-band. Okay, we know that. We all affirmed we're not going to do that anymore in ranges. For those of you who felt we were slightly starting to edge our way up, you were buying support levels and taking coin up here at the top. Pulls back. This next pullback, let's see if we get all the way down. We start holding the mid-band. Now, for those of you who are observing it, you're starting to hold a slightly higher high here. Now, this would start to become a case here. Now, I would agree with this observation if you said, well, if this holds, see, you know, if you're going to remain in this range, it came down here 1, 2, 3 times to this swing down here. Now, if this holds and you take that out and you pull back and hold it, now you could start making a case for a trend change. Okay, let's see what it does. Oops, this thing is kind of fighting me tonight. Poke up, we get another little head fake, comes down. See the other head fake there? We all typed in tonight that we're not going to take these, right? Remember? We all typed it in. It's ingrained in our subconscious now. We're not going to take those anymore. We all agreed. No head fakey here, right? Now, furthermore, for those of you might be saying, well, you know, for you head fake aficionados, where is the support level when this head fake occurred? And I'm going to help you to make this a quick question because we got a lot more to cover. Is it support level here at A, right here where it broke out, or support level B, down near the midband? A, and I'm referring to support below where the secondary head fake occurred right here. Where is support right now? A, right where it broke out around 44.40, or B, down near the midband? A or B? Higher level, midband? Real simple question. Got a mix of answers coming in. Most of them, a couple of them not sure. A lot of B's. Good. It's B. It's right here. Now let's watch what happens. Now notice we come down and we consolidate right under here. We come down, we actually break the midband slightly. We can't get quite to here. With this little retracement off of our head fake, we come all the way, not quite to our support level, but slightly below the midband. So at this point here, are we still in the range, yes or no? Right here. We all pinky swore together. We avoided that head fake. Yes. Look at the chart. What did we say? What did we say? We said it all the way back over here at 7:46 when we drew these lines. And by now, that would have been an hour and a half ago. We all said it, right? I know it's easy to forget. And here's the thing. Here's what makes this tough. And I understand totally how everybody feels about this. And some of you might be saying this to yourself right now. Well, you know, it's easy at armchair quarterback, and you know, you're sitting there all comfy in your chair on a Thursday night to sort of cherry pick what happened some couple days ago at 8 o'clock in the morning. Well, I mean, we do it all the time live in the real room, right? So I mean, we don't make this stuff up when the markets are doing things like this. In fact, this happened in NASDAQ this morning. Remember? This exact thing happened in NASDAQ this morning. Remember? It broke up, it hit a swing, it came right back to the midband, it bounced, it went up back to that swing, came back, it did it like 3-4 times, remember? We traded it. In real time, we traded it. We said, look, this is the range it's in, you know? And then it broke out, remember, and it ran up. My chart, my data's all screwed up from today. I don't know what happened to it. I would like to show that, but I can't. But remember, and that broke up, and then everything rolled over, and Russell broke, and then we got the monster shorts. Well, here's the thing. Here's the thing. You have to look. There isn't sufficient retracement off of this area right here to call this a legitimate support resistance area. Now, let me qualify that. If on one hand the market had come back into this area at the upper level, I'll just classify it more or less as this area right here, and broke up, in fact, as it did right here. Oh, let me just move on. Let me ask you this question. Do we have a trend change now, yes or no? Right now. By 8:41. What do you think now? What I was trying to say back here, who had that question? Chris. Yeah. Well, I mean, if this area had held and it broke up like it did here, Chris, you know, the fact of the matter is, going into this head fake, we knew that there was a swing here that had started to become established, although it be a minor one, and the major support was still down here, right? You were still in this range. And as long as it dropped back into that range, it could either check this mid-band one more time, or it could come all the way down here. And this is exactly what it did. So, you know, we tend to try to avoid shallow retracements. The only time you could get into something like that is if you were in a powerful uptrend and it was only pulling back like a couple of 5-10 ticks. In other words, you know, it's going up and up and up and it's only pulling back a little bit. Well, in those cases, we'd be buying. But when in a range-bound choppy condition, we wouldn't want to be buying right here. Yeah, it took this swing out here. It took out the top of the trading range. It took both head fakes out at 43.50 and 44 up to a fresh swing high. So now we're looking to buy retracements. Good. Yes, the answer was yes. The trend had changed to up. Background is green. We're stair-stepping up. All the pieces are in place to start looking for, we'd be looking for pullbacks, Michael. Yeah, retracements. Okay, good. Now some of us, let's move on. I don't want to spend all night on one chart, although I could. NASDAQ's quite the beastie for it. Let's get ES up here, and then we'll try to get crude and a couple more up before we run out of time. I believe this was ES today. Let's take the predictors off. What do you think about ES today? So this is, let's get oriented here. I'm here in California, so this is all Pacific time. This is overnight. Midnight Pacific is on the far left. 6:30 was here. Right? So the open of the market was here. What do you think about this market? Was this something you would think you'd like to be trading today? Eight o'clock would have been right about here. So this is when we closed the room. So ES from the open at 6:30 until 8 o'clock when we closed the room was right about here. This is the movement you had in ES all the way up until almost 10 o'clock, 9:30, 10 o'clock. And then you got a rollover and a breakdown. Now the background was red. No thanks. Okay. Well, you know, this is why we get a lot of questions. You know, why don't you trade ES? Why don't you know, it's a very liquid market. You know, well, this is why. I mean, you know, the Russell and NASI and YM have moved, you know, 30, 40, 50, 60 ticks, and ES is in a range of 14 ticks for like 3 hours. I mean, sure, you can make the case that you were kind of somewhat in a well, you were sideways, really. I mean, you know, you have your resistance is up here just above the mid band, and your support is down here. Really, the only trades for you in the first couple hours were scalping short, right? Every time it came up here to resistance, you'd be shorting it and covering it down at the bottom. up in here. And then here you had another short. If you weren't bored to tears and gave up on it, obviously you had another mid-band short right here as it started to stair step down a little bit. So we're trading the retraces, right? When you're in a market like that and it's range bound, you're trading, if the prevailing trend is down, then your primary mode of entry is shorting the top of the range, right? That's our entries, shorting the top of the ranges. Yeah, I mean, so, well, if you had to trade the pre-market to get this one, and here's 630, established that low at 641. You could have put a line very clearly right there. You could have put a line over here before the market even opened. Up in here, you knew this before 630, really, right? Over here to the left. You knew that swing going into the market open right here. Could have put a line right there. And then shortly after the market opened, it hit sort of bottomed at 47.50. You could have put a second line right there at like 645. And then essentially, that's what we do. Okay, there's no real mystery in trying to trade a range. If you're going to identify a choppy market and you want to trade it or decide whether you're not going to trade it or not, the only way to do it is you have to put 2 lines on the chart. That's the first thing you do. 2 lines on the chart. That's where it all starts. Because without those 2 lines, it's hard to have the framework to know where the support and resistance levels are and decide whether you're going to get in or not, right? All right, let's move on. Let's see what else we have here before we run out of time. I think we had quite a few requests for crude. Let me get a crude chart up here. Stand by. Hey, just a quick question. How many of you still trade the Russell TF? How many are you paying the extra fee? Whatever it is, I'm not 117, depending on depends on the broker where you're getting the feed from, however you're charged for it. Anybody still trading the Roosty? Just type in TF or yes if you are. Let's see how many. Oh, quite a few no's. Not paying it, yes. Costs about the same on TradeStation. Bunch. Wow, I don't see any yeses. Wish we replace it. Really? Does anybody trade the Russell? I don't see one yes in here. Huh. Wow, that's surprising. I thought we still had some Russell traders. Okay. Well, we'll take that into account. Oh, Gary does. Yeah, of course, Gary does. He trades the Russell all the time, makes pretty good money at it. Yeah, I'll talk to him about that, Chris, well, we're already trading YM in the room, so we'd have to pick like EMD or gold or something to replace it if we were. I don't know, it's been so entrenched in there for years, it's going to be tough to get rid of that. Okay, I'm going to try something different here. I'm not going to take such a myopic point of view on this. I'm going to show crude oil over the past. I'm going to go back into late April, and sometimes it helps to do this. Take a macro view of the markets. Here's crude going back a couple of days. And this is a great little exercise to do if you can do this on your own on any instrument. It doesn't have to be crude oil. Can everybody in here tonight see on this chart where the periods of trending are and where the periods of consolidation are? Can everybody see where those are at? Places where the market's trending and places where the market's where crude oil is consolidating. Yes. Jim, MG, quite a few you do. Okay, good. Let's do them together. Over here to the left. And by the way, I know Gary does this. I do this on my charts all the time, is you go back a day or two and you can look at these levels, and sometimes in subsequent days of trading, those levels come into play again. Let me show you where you could have done that here. Let's just start off to the left. I'm going to start off way to the left here, and I'm going to put in some lines, and we're going to do this exercise together. Oh, Chris is actually typing the levels in. Good. All right, back here on the 26th, it looks to me like you had support down here and resistance more or less up here. Now, on the subsequent day, on the 27th, when she started to sell off on crude, where did she come down into? Right down to that prior support level, didn't it? Do you think if you were trading crude or an instrument like this, that it would have been helpful to know this swing level from the day before? If you were short in here from this downtrend, and wouldn't it be helpful to know this area right here at the top of that trading range, because it came up and hit it and then took off like a little bird? Sometimes if you notice on Gary's charts, he'll have lines that just sort of show up that he didn't put in there from the morning. Of course, there's lots of lines that we put in there while we're in there. We're putting lines all the time, right? Which is entry and exit and support and resistance and trend lines and all manner of lines. We got all sorts of lines. But occasionally some lines will show up that he doesn't put in there. Well, if you're ever wondering where they came from, those are support and resistance lines from prior days. So when, for instance, when you put these lines on here and you close down and you reboot for the day, you got to make sure you save your workspace, save these charts, so that when you come back, all these lines are on there, and so you see them for the next day, for the next couple of days. Here it happened again. This would have been on the 27th. You can see we had several consolidation, or two consolidation areas, a lower one here and an upper one right here. Oops, wrong type of line. Stand by. Right here. Now, isn't it interesting to see? Now, at this point here, you can also make the case that you had one more or less kind of right in here. So here's the 26th, here's the 27th, here's the 28th, and here's the 29th over here, 28th over here. So I guess my question to you, everybody in here tonight, is have you noticed that support and resistance areas from prior days many, many times come into play over the next subsequent several days of trading? And wouldn't it be helpful to know if you were trading either these little ranges or these little trend moves up and down? You know, you sort of have a range here, and then it broke down. You had a little range down here, and then it broke up, took out. Now you're going from range to range. They're almost like going from swing to swing, from pivot to pivot. Wouldn't it be helpful to know these from day to day, where those prior swings were? You think that would help you see whether you're in ranges or not, that the support and resistance had held from prior days? Yeah, you bet. I do it all the time. So does Gary. Try to do that if you can. In fact, if you got a couple extra spare moments tonight when we wrap, or early in the morning in the pre-market before you get started, try to take your chart, any chart, doesn't matter. They all, not all of them are exactly like this. Okay, some are going to be very different. But for the most part, you can come in and pick some spots. You know, it doesn't have to be all of them. I mean, you can just pick a couple of them. Go with a couple of, especially when you have support, you know, very well-defined support range swings that markets are hitting. Because more times than not, come that next day, I mean, either it's going to trend up and down through them, or it's going to stay stuck in between them. And that's going to help you even before you get started to define some consolidation ranges for you're ready for when they occur. Peter says he uses the Globex session high, low, and mid levels. He finds those helpful for when he trades the cash session. Good. Yeah, I mean, you know, you could just do that, Peter. A lot of traders do that. Let me show you another, before we wrap here, let me show you another little thing. I used to show this more, but I'll show it tonight. I don't know if I have it in here. Give me a second here. I don't know if I have it. Does everybody know how to do the 1440? chart? Does everybody know the 1440 minute chart? What that is and how it works? Excuse me. 1440 minutes emulates a day chart, but it's 24/7. Yeah, it's like a day. It's like a daily chart. But it eliminates the gaps because it's continuous from day to day. Let's go ahead and let's do one for. Let's see. A lot of traders in here tonight trading the Russell, or I mean Nasdaq. Give me a second, please. I will set one up. Yeah, I mean, from a macro point of view on your charts as to what's going on in the overall market in terms of trend, this is a very, very good chart to use. Got huge gaps in my data. This is not working out at all. Yeah, never mind. Never mind. I'm gonna have to get. Yeah, I'm gonna have to forget about that one. But anyway, I've shown this in other webinars. All you do is you go into your control center, file, new chart, select minute, put in 1440 minutes. I like to go back at least 60, 90 days. You can get support and resistance levels out of there. That's what I was trying to show you, is sometimes some very good support resistance levels. If your market that you're trading is going sideways, sometimes you can look at that 1440 and the support, it'll be, or it's in a channel. If it's trending, you can see a nice little channel. It'll form some support resistance. Just pull that up on your chart, 1440 minute, go back at least 60, 90 days and look at the past couple of days, a week or two. And then you can transfer the support resistance lines right off that 1440 onto the chart that you're trading, in addition to any swings that you have from the prior days before, particularly when they were tight consolidation areas like this and like this and like this. Okay? All right, well, that's a wrap. Thanks for coming, everybody. I appreciate your time tonight. Let me stop the recording.